Let go. If you want it, you can have it. So stay woke. Haters creeping. They gon' find you. Don't catch you sleeping. Ooh, so stay woke. Ladies creeping. If you want it, you can have it. Now stay woke. Happy Sunday. Good morning. Or good afternoon, good evening. Let's go. My peanut butter chocolate cake with Kool-Aid. You know about that, Damien? It's my jam. Good morning. Happy Sunday. Market's opening back up tonight. Gonna get right back into it. Thanksgiving week. Weekly schedule has already been sent out. The live stream schedule. We will be trading pre-market a couple of days this week. So if you haven't already taken a look at that, make sure you do. You don't want to miss the morning session pre-market streams, thinking that we're going to stream after the opening bell. So if you haven't already, take a quick glance at that. We're going to get started in like 3 minutes. Apologize for the last minute schedule change. I was doing some things, but we're ready to go now. For those who are watching this webinar recording, if you're not here in real time right now, look in the bottom right clock of TradingView, the bottom right of your screen. We're going to get started at 11:05. Okay, so you can fast forward until 11:05 down here, and we should be getting started by then. That way you don't have to sit through this. But as for everybody else who's tuning in live, we're going to let some more people join in, and then we're going to get started. Let's go. Sharif, JQ, Comte, Damien, Official, ACC, Joey. Let me make sure my audio's turned all the way up. We're good. Good morning. Trill Native, what's going on? Let's do this. Let's go. Ready for this week. Both in the markets and outside the markets. Thanksgiving, family time, family coming in town. Get to see my nieces. Hopefully you guys plan on spending some time with your friends, loved ones. Obviously no stream on Thursday on Thanksgiving Day. I'm not sure if the markets will be open. It may be like an early close, or maybe they're just all closed altogether. I don't know, but it makes me no different. I won't be showing up on Thursday, and then we'll be back Friday. Let go. Now stay woke. What time we got? 11:04-ish. About 1 more minute. But I can go ahead and explain. So today, this may be a quick one, may not be, but we're going to go over some more of the 5-minute setups. Same thing we talked about in the last webinar. We're going to go over that and relative to the midnight opening price, and I'll show you what I mean by that. So we're going to do a little bit of back testing with that this week, this past week's price action. And we're also going to look at pre-market setups, just a little bit of back testing using the macros and whatnot. And then depending on how much time, either we'll just take questions for the rest of the webinar, or we'll just wrap it up and go enjoy the rest of our weekend. Finally got Wi-Fi in the crib, so I can actually stream in the comfort of my own home. Long overdue, but we're here. What's up, Jason? All right, so here we go. First, what we're gonna do is just back test, okay, setups as far as the midnight opening price, okay. For now, for the sake of this webinar, we're only looking for longs beneath the midnight open and shorting opportunities above the midnight opening price. Again, we're going to use the logic that we used in last week's webinar. So if you haven't already watched last week's webinar, you may want to go check that out, okay? You don't want to miss it. So we have Friday's trading, and we're just going to work back to Monday, and all we're going to do is slap on the midnight open. Okay, we're not going to do any new day opening gaps. We're not going to use any crazy PD arrays on the higher time frame. We're not analyzing the higher time frame. We're going straight from the 5-minute down, 15-minute chart if we need to zoom out. But here we have the midnight open. Okay, for those who don't know the reasoning for this price level, anything above it is a premium. Okay, your best shorts, whether it's during London, pre-market, okay, whatever, the best shorts are above the midnight opening price, and the best longs are beneath it. Okay, whenever you're bouncing around above the midnight open, okay, I always teach that brings consolidation. And what do we see Friday? Everybody, okay, for the most part got chopped up, and it was just high resistance, okay? Midnight opening price can save you from getting caught up in all this if you just realize that we're unwilling to leave that price level. All right, so this is going to be a little bit kind of like a back testing / using what we learned last week. We have relative equal highs here. So that is your buy side liquidity. All right, and here I have shaded the gray region is your morning session from 9:30 to 11:30. Okay, 11:30 starts the lunch macro. So that's what I'm doing. All right, buy side, relative equal highs here. We run that out. Zoom in here. What do we see here? Long wick. And what do we know about wicks? Wicks are gaps. So you always hear me say, I'm seeing this wick like a normal fair value gap. Okay, and using what we applied last week, if we take this wick, okay, what are the rules? If we're bearish, okay, if we're expecting lower prices, all right, we sweep relative equal highs during the first 30 minutes of trading, because that's the opening range, 9:30 to 10 o'clock. I always really treat that as a Judas swing, okay, as a fake move. So first 30 minutes, run out the relative equal highs. We form this long wick, which is a gap, okay? Next candle here opens, and we have what? Consequent encroachment and below. You want to see that offer resistance. You don't want to see price work the upper half of any premium array if you're bearish. So let's dive down to a lower time frame. All right, and what premium arrays can you use as an entry to get into the short using that higher time frame wick that rests in the lower half? Okay, we have volume imbalance. So this is something you can save as far as entries. A lot of people are looking to short this, and look how much drawdown you have to weather if you're using this fair value gap. Okay, there's nothing wrong with using that as an entry, but you're taking in all of this. But if you work from the 5-minute down and you understand you have that wick here, you can expect price to trade into the lower half. That's completely normal on the 5-minute chart. Nothing wrong with price trading up into the wick. On the 1-minute chart, if you're getting your entry all the way down here, you have to take in all of this, and that's a lot of risk. So right away, I'm looking at the volume imbalance. That's a possible entry. You can have your limit order right there at the low. Opening price of the bearish order block. Okay, and then we also have this breaker. Take this off for a second. You have your high, low, higher high. I don't have access to a seconds chart, but I already know if you break this down on a 30-second chart, 15-second chart, this is going to be more obvious of a high, low, higher high. Okay, but I don't need the second chart to understand that this is a breaker. So you can use that as an entry as well and save yourself all of this drawdown by entering the low of this fair value gap. All right. So there's your entries. In the lower half of that wick on the 5-minute chart, stop loss above midpoint of the up close candle. Okay, which pretty much rests right about constant encroachment of that 5-minute wick. Put your stop loss above it, plus a couple of handles, and then you get that move down. But we all know Friday, I wasn't interested in any of this. A lot of people got chopped up that day. We're chilling, playing Christmas music. Moving on. All right, right here. And again, I haven't looked at this. This is my first time looking at the chart, so we're going on as we go, I guess you could say. He got shredded. Yeah, Friday was rough for a lot of people. Friday, not sell side. I didn't even care touching Friday's trading. From what I've seen on Twitter and the YouTube community, a lot of people got burned, but it's okay. Next week's a new day, new week. Midnight opening price. Again, we're only looking for longs beneath the midnight open and shorts above it. All right, so here's your midnight opening price. Here is your fair value gap, breakaway gap. You want to see this stay open. Okay, you don't want to see that traded to. And then you have your fair value gap here, deeper retracement than what you would have liked, but that's fine because this is the fair value gap that you don't want to see traded to. We can work in this lower half, but what do we have here? A breaker. High, low, higher high. Once we take out this low, these two down close candles here become a breaker. All right, so let's refine that entry. So it doesn't just apply to 5-minute fair value gaps. Okay, let's say breakers is what you can see easily. Let's say you struggle seeing the fair value gap and the breaker is just more your thing. Nothing wrong with that. Let's take a look. So here's your 5-minute breaker. It's the entirety of these two down close candles in between your two highs. This high and the highest high before taking out this low. Let's go to a 1-minute chart. How do you know which fair value gap to use as an entry? Which ones do you expect to be filled in, traded to? Which ones do you don't want to see traded to? So here's your entire 5-minute breaker that we're basing the logic around. Are we looking for a short here? Are we looking for a short here? You can. Or this fair value gap that rests where? In the lower half of the breaker on the 5-minute chart. Do we want to see this fair value gap traded to? Absolutely not, because it's resting above mean threshold. So once we take out this low and we form that breaker on the 5-minute chart, don't want to see that traded to, don't want to see that traded to. This is permissible. Okay, these entries, I'm forfeiting that. Now, could NASDAQ fail to trade to the breaker, work this small one here, go lower? Sure, but precise entries, the high of this candle, trades up to mean threshold, the wicks do the damage, that's fine. This is a balanced price range here. Your stop can go above that, and then we sell off. Let's see if we have another one. Okay, right here. Let's say you missed this entry on the 5-minute or you didn't trust it, you're away from your charts, no problem. Last up close candle here before the rotation lower, that is a bearish order block. You do the same thing, okay? So far, think about what we've done. This applies to any PD array. So we looked on the 5-minute chart on Friday, consequent encroachment of this wick to frame a setup using the order block, volume imbalance, knowing not to take this inefficiency here. And if we go to today's trading, we use the breaker. All right, and now we're going to a 5-minute order block. So it applies to any premium array, not just fair value gaps, but you still need narrative, okay? Up close candle, right there, okay? That entire range, that's your bearish order block, midpoint is mean threshold. We leave, come back, what do we want to see? We want to see the upper half of the bearish order block not be traded to, and we want to see the lower half work price lower. So can you just enter inside this fair value gap or at the opening price on the 5-minute chart? Absolutely, but if you don't like trading the 5-minute because of risk or it's too slow of a time frame, no problem. Let's drop down to a 1-minute and see how we can use this order block here to frame a more precise entry with a tighter stop. All right, so what do we have here? This is that entire order block on the 5-minute chart. This is when I would use a 2-minute chart or a 3-minute chart. See how it's displacing lower, but there's small little pauses, up close candle, then displace, up close candle, displace. So you have a lot of wicks. A lot of people ask, when do I use a 2-minute chart, 3-minute chart? Whenever I see price like this, I know if I jump up a time frame by like a minute or two, there's gonna be a fair value gap in here. So let's go to a 2-minute chart, and then right away it becomes a little bit more clear. Fair value gap here. Okay, do I want to see this traded to? No, it's in the upper half, and it's a balanced price range. Single pass up, single pass down. this range of price is balanced. So I don't want to see that fair value gap traded to, but you have this one here. All right, does a little bit of coloring outside the lines with the bodies, but that's fine. It's trading to consequent encroachment of the wick. You allow for that. Okay, this candle closes right at the high of the fair value gap on the 1 minute chart. Trades up perfectly, consequent encroachment of the wick, breaks lower. All right, stop loss can be placed above the 5 minute order block mean threshold because this is a balanced price range. You don't expect that to be traded to. And then just a little nugget, something ICT taught, I think I mentioned this before, but whenever you see price trading outside of a fair value gap like that, which is something you really don't want to see, okay, this is a little bit more advanced, you don't have to do this, but how much farther outside this fair value gap can price trade to? Yes, the consequent encroachment of the wick, okay, wicks are gaps, you're allowing for that, but it's a little nugget. If you take the entire fair value gap and run standard deviations on it, there. Let me take this off. See if I can. Okay, so this entire fair value gap, let's zoom in real close. Go full screen. So I'm taking the low of the fair value gap all the way to the high. Take this off. Okay, and I'm getting one full standard deviation. So here to here, project it higher. Okay, price is allowed to trade up to that price level. The high in this candle is 708 even. Okay, -1 standard deviation comes in at 708.25. Okay, the wicks do the damage. I'm not worried about that, but the body's staying within that -1 standard deviation. So this is something that I also look at when price is trading outside of a fair value gap. I don't draw this out because you can just eyeball it. Okay, if price is trading this much outside the fair value gap, which I don't want to see, does it trade more than 1 standard deviation of the entire range? Okay, it doesn't. All right, so let's go ahead and clear that off. All right, 5 minute bearish order block. Fair value gap here on the 2 minute chart. Why the 2 minute chart? Because the 1 minute chart, it's just a lot of stopping displays, up close candle displays, wick. There's no clean inefficiency. Just use a 2 minute chart. 3 minute chart is way cleaner. Okay. Do we want to see price trade to the order block? It can. That opening price is in the lower half of that 5 minute order block, but this right here. There you go. All right, let's move on. And then where are we as far as the midnight open? We're above the midnight opening price with all of this. Your best shorts are above the midnight open. All right. This example here. Standard deviation, just it's just taking the projected price run. You just, like right here. Trying to find an example. Like let's say you went short and something in here and you want targeting, just take that high to this low. Projections, screenshot that if you want it on your fib, and then you can use all these levels for targeting. That's all it is. All right, so we have Wednesday's trading here. Same rules. Let's slap on the midnight open, which comes in right there. All right, this is one of the rules that we talk about. Okay, if price is trending away from the midnight open, if we're all the way down here, either one of two things are going to happen. Either we're going to have a really trending day if we're that far beneath the midnight open, or eventually you're going to see some sort of retracement or full out reversal getting back above the midnight open price. Just failed to do it here. But just for the sake of this video, we're only focusing on using the midnight opening price underneath it long, so we're not going to look at any shorts here. Let me replay mode. So I'm going to opt for a 15-minute chart. Why 15-minute chart instead of 5-minute chart? We had this displacement leg here, but notice how we have a small inefficiency. We don't really have a fair value gap here. Yes, you can use the inversion fair value gap if that's your model. There's nothing wrong with doing that. But I'm looking for a fair value gap in this price leg. Since we don't really have a clean one other than that small one there, just bump up a time frame, and that's pretty obvious, bright as day. So this is the fair value gap we're going to use. And let's mark that in blue. All right, so here, trading down into the order block, we've taken out short-term low, opening price on a 15-minute chart, draw it all the way through, and the logic is because we're way beneath the midnight open, you're watching to see, do we have the willingness to take out the sell side, or do we want to get back above the midnight open? Okay, we saw a few minutes ago it failed to get back above the midnight open, but the logic is you're expecting some kind of retracement or reversal because we're in this much of a discount. Opening price on the order block, draw it through, we hit it,